Good morning, everyone. How are you doing today? Michael Zuber with One Rental at a Time, and we have our Tuesday expert conversation with Rilus Dana. How you doing, sir?
Hi, doing great. Glad to be here.
Yeah, man. Usually what we do in these conversations is we stay in our lane. We talk about estate planning, probate, things of that nature. I want to change it up this week, which occasionally I throw a curveball at my audience or my experts. And we're going to talk about Rilus, the real estate investor, right? You are part of my course. You're a part of Subject 2 with Pace Morby. So I just want to figure out, what is Rilus doing in the real estate market today? What are you looking for deals? What are you doing for homework? Just what's going on with Rilus, the real estate investor.
All right, great. Yeah, these conversations are fun. I never know quite what we're going to talk about. Sometimes we kind of have an idea, but a lot of times it's, hey, what do we want to do? And we talk about it live
Yeah,
and record it for everyone to share.
yeah.
So Rilus, the real estate investor, is a lot like myself, in my attorney business.
Yeah.
So I'm a probate attorney by trade.
Yep.
And I feel like that's what introduced me to the real estate investing world. One way is, man, all these people that have a lot of money, what do they have in common? A lot of them, real estate is one thing they have in common. So that certainly got my
That's
attention.
actually interesting. Sorry to interrupt your flow there. It's just these things come to me wildly, right? When you look at your, I don't know what you would call it, a portfolio of clients, your history with your father, because again, you're an attorney, a son of an attorney, right? So you have probably thousands, if not tens of thousands of reference points. But on that point, what percent of the rich, and you can define rich as whatever you like, seven figures and above, what percent of them from your history, your experience only kind of have real estate? Is it more than 50%, 70%, 20%?
Yeah, I would say at least like 80% or so. Like it's usually a
Wow.
big part of their portfolio.
There's a hint,
Whether
folks.
it's just
There's a clue there.
yeah, yeah. So it's just, as a young attorney, I'm noticing, all right, these larger estates, what do they have in common? The other ones, it would be either like stock or something.
Okay.
Maybe they were in a startup or something. Not these gambler stock type
Yeah.
things, but they were like
Yeah, they were
an
founders.
executive,
Yeah.
yeah, founders, or just early in a startup where they had stock options.
Gotcha. Okay.
So
All right.
that
Sorry.
was kind of the exception.
Right.
So yeah, so real estate, it's been on my radar. It's something that I've wanted to do.
Okay.
So in my personal life, I was married once before. I had a house, and just as we got a new move up house is when my marriage blew up.
Hmm.
So ended up losing that house, and I wish I knew about subject 2 back then, because I was in a situation where I couldn't sell it.
Hmm.
We just barely bought it, and
Yeah.
this was when was it, like 2008 or 9? Kind of like top
Oh,
of the market type of
bad
thing.
timing.
No, it was later. It was later. It was what was it? It was 14 maybe,
Oh, okay. All right.
about 2014,
So the
about
market
seven
was
years ago.
just, yeah, the market was kind of flat and it was just coming back, right? If you could have held for another couple of years, you'd have been okay. But yeah, just bought it, stock, no equity.
Yeah, so I sold a house before and did really well. So funny story, it was on the market for a little bit. We had a house together in East Mesa,
Mhm.
and the Canadians were buying in that area like crazy.
Yeah, the snowbirds. Yeah.
So yeah, and I listed my house. I was like, dang, if someone would pay those prices, I would sell.
Yeah.
And then I listed for like a month or two, and then it's like, no, let's just stay here. And then a realtor contacted me later and said, hey, I saw your listing was on there, and then it's not. Are you still interested in selling? It's like, well, for the right price. And basically they paid like more than what we were asking, let us
Wow.
stay there for like 2 or 3 months for free. So I did really good on that transaction, and then turn around and kind of like overpaid, like paid a
Yeah.
premium just to get into something else.
Yeah. Okay.
Um, but anyway, so that's where I kind of fell off the property ladder, if you will.
Yeah.
After, because I was able to, I guess, get on it. I guess kind of take it for granted, right? It's like when you have things, you don't always realize like the value of it and how easy it is until you fall off sometimes.
Hmm.
So,
Okay.
I've been so my marriage ended. I kind of changed businesses, ended up starting my own law firm, and kind of have been digging out since then.
Right.
And going back to my foreclosure, it would have been a perfect sub two. If I would have known Pace back then,
Yeah.
or someone that was more people were doing that, it would have been perfect.
Right.
Because I was at the point where to sell it on the retail market, it just didn't work out.
Yeah.
Paying commissions and closing costs, I would
Yep.
have to write a check,
Yep.
and I just couldn't get anyone to buy it for more than that. So where I'm at now is, as a probate attorney, I've started using some wholesale deals
Hmm.
as a way to supplement my income.
Okay.
And the way I do that is with Pace and people like that, where I just disclose to my clients, and sometimes they're not even clients. Sometimes I'll get leads, people that will call,
Hmm.
and the first issue they need is to sell the house, right?
Yeah.
And maybe they're already a trustee of a trust. They're like situations we've had. I guess these were already clients. We had a situation where someone wouldn't move out of the house. So it's like, all right, your options are is we get another lawyer, do the eviction, or
Mhm.
we just sell it as is. But there's
Yeah.
people that will buy it,
Yeah.
as is,
I've done that.
with the tenant. So, sometimes I'm helping solve problems like a wholesaler is kind of what I realize, like
Yeah.
the pain that people have around real estate. My niche and my specialty is as a probate attorney, I can do that part of it.
Yeah.
So meaning if they need to change title out of the name of the deceased, I can handle that part.
Hmm.
So so now in my business, as leads come in, if people call, I'm looking if they have real estate, I'm looking for other options.
Right.
I'm looking to see if they want someone to have a cash offer, or maybe it's a wholesale opportunity, or maybe it's a subject to or seller finance. Maybe they just
For
want
sure.
income.
Yep. Yeah.
So
Yeah. That's awesome. Again, I wish more probate attorneys realize that their profession, their experience, their skills, their clients, it's a great lead source. And not only can you take action, right, with disclosures and all of that up front, of course, but you can also help facilitate easy transactions. Even if you Rilus didn't want to take ownership, you could have a lead source if you have that buyer community that's ready, right? The cash buyer, the subject to buyer, the seller financing buyer. They could be the same person, but don't have to be. There's a lot of things the estate attorneys or probate attorneys could do to really make that transition more efficient, I guess.
yeah, the number one thing we want to do is the probate. That's the obvious thing, the legal work.
Mm-hmm.
And that's kind of how I got more into this industry.
Mm-hmm.
Pace invited me to a real estate meetup a while ago, and like, all right, this would be good as a probate attorney. I'll meet these real estate investors
For
that
sure.
need my services, and I like networking at those places because people love probate attorneys at those places.
Yeah.
Everyone
Give
wants
my
that
card. Give
deal.
my
Everyone's
card.
like, oh, you're a probate attorney. Yeah, yeah. So
That's funny.
um, so yeah, I like that community, not just because of that, but it's nice to I like their excitement, the hustle and the work ethic,
Oh yeah.
where some of the legal things I go to are kind of stale, and
A little
I don't
different
know, it's
vibe at a
like,
real estate event than a probate attorney event, huh?
yeah, you have the sponsors, which are like the big law firms that are speaking there, and their cronies are in the front.
Mhm.
So yeah, it's an exciting world. This morning in the daily financial news, you're talking about how there's more inventory. It was, someone in the Facebook group mentioned it.
Yeah.
So what I thought is like, all right, now it's kind of like a kick in the butt for me. It's like, all right, it's time to get
Yes.
serious now. I've got to do the work more.
That's right.
Got to look for this new inventory.
Yeah.
But I discovered the daily financial news probably a year ago, maybe a little over a year ago.
Uh-huh.
And I just started watching. It's like, all right, I'm gonna get more in tune to what's happening with the market.
Yeah.
Because
That's
and
awesome.
it's nice getting educated and following with you. But I feel like it's going to be the perfect storm that's coming up where there's going to be these seller financing opportunities and sub two opportunities.
Yeah, I couldn't agree more. I think your experience, unfortunately, that you went through in 2014, is going to be a pretty common occurrence. I don't know when it will be. It will be probably 2022, 2023. It'll probably go on for a while where prices kind of flatline, right? Because we have adjustments in interest rates and inventory and all of that. And then if you were a new buyer in that, like you were in your move up home, you're staring at, oh my God, I got to pay 5 or 6% commissions to exit, 1 or 2 points to title. I got to get out, right? Because unfortunately, what happens in this world is life still happens, right? Your marriage can blow up, your business can blow up, your job transfer, an unfortunate health event. There's lots of things that could happen in a market that is suddenly flat after being hot for 4 or 5 years. So I think you're right. And especially these avoidable foreclosures, people don't realize just how many people are going to be saddled with debt that they're going to feel good about. Oh, it's $50,000, zero interest, no payments. But damn, that thing's going to sit on there as a second and just make that property unsellable because all the equity is gone. But they'll have a good payment for subject to. It's going to be awesome.
Yeah, so I'm already seeing people, legal clients I've talked to, where I've done their estate planning and they're on the forbearance. And they're like,
Yeah.
they're stuck a little bit. This one particular lady I was talking to, because she's got equity,
Yeah.
but she can't refi
Yeah.
because she did the forbearance. It shows that she's in default,
Yeah.
something like that.
Yeah. It's
So
non-payment is, I think it will technically show, right? Non-payment for however many months, right? So it's going to be interesting.
stuck, and I feel like, all right, maybe this is kind of the start of that. We're going to be seeing more of these people
Yeah.
as foreclosures come back, as I don't know if demand's going to slow down. It doesn't feel like demand's going to slow
Yeah, the
down,
only way
but
demand's
maybe
going to
with more
slow down
inventory.
is interest rates. Interest rates got to make that big jump. Right now, they're right about 3. If they got to 5 or 6, demand stops. I'm not saying it gets there, but that's really the only thing that slows demand. So I think demand stays pretty consistent. It's the supply side that comes back. And yeah, I think you need the kick in the butt, right? One of the students in the group, right? 22 new listings in their little defined market. Now 68. If you do the math, that's about a 30% delta. So um, it's coming. It's going to it's going to jump off differently across the country, but I think it's coming.
Yeah, something interesting. So this morning you're talking about, I can't remember the economist, the person, but they're saying it's like
Robert
they
Schiller.
named a time period.
Yeah,
Yeah, they said, what
2003.
time period did they say? Yeah,
2003.
so it's like 2003. Was that when the big run up was, or something that I
No.
saw that
Yeah,
I'm trying to think when the
2003.
market went crazy.
Yeah, 2003, in my opinion, was the last year we had solid lending. Because what happened after 2003? 2003 was an up year. I think it was 7 or 8% nationally, maybe 6, but it was an up year. But what happened after that is interest rates started to tick up and demand started to be squelched. So what banks did is they started creating adjustable rate mortgages and exotic loan products that created that continued the party, right? They basically added more alcohol to the punch bowl. And so 2003 was a good year. 2004 was less good. And I'm talking about loans. 2005 and 6 were horrible lending years. So yeah, 2003 frankly, is not a year that scares me. It was a good lending. You had to qualify. You had to have real down payments. And again, when Robert Schiller said that, I was taken aback because when I think about 2003, I think about another 4 years of appreciation. That's what I took from that conversation, which is like, oh my God, 4 more years of appreciation. Woo.
Yeah, so I saw a sign recently. It wasn't a for sale sign on a house. It said accepting bids,
Oh,
accepting bids.
yeah, that's
So, and
crazy.
it's reminding me of that time. If it was later when there was like auctions and all of that,
Yeah, they were
and it just
flipping
seems a little
contracts and
scary.
stuff. Yeah, it's we some parts of the market, you happen to be in Phoenix or Scottsdale, which is probably leading the charge. It's if we ever go back, really watch lending. If lending ever gets wacky again, if liar loans and teaser loans come out again, that's a sign that we're getting really toppish. But yeah, I still think Phoenix is growing population. I don't think you're building enough new homes. But yeah, there's crazy activity. And again, new builders, what we saw last week with the, I think we have Lennar reporting tomorrow, home builder, is going to be what's going on with builders. Right now, it seems like they've actually retrenched, which is the wrong. I mean, we need more supply, not less. And builders are like, I'm not going to build in this crazy environment. It's too expensive. I don't want that risk. I'll just wait. So it's just a weird environment. It's I don't think demand's going to slow down, at least in the next year or so.
Yeah, it doesn't seem like it. Maybe builders will start building more if the materials come down.
That's what we need. And that's, I think, one of the points Robert Schiller again was making, that builders need to do their job, right? Builders have underbuilt for a decade. And that is now really causing a problem for overall supply. So Robert's basically like, builders need to get on their horse. They need to build. And his point in his article was basically they need 2 to 3 years to build so that we can get back to maybe a more equilibrium, and then prices could steady. So it'll be interesting.
Yeah, it's interesting. I think, something different now is all these portfolios that are buying now.
That is
all these
changing.
Institutional buyers.
Yeah. Build for rent, Invitation Homes, all these people that kind of proved it in the real estate crash that you could really own and scale single family. They're changing the game. They've got hundreds of billions of dollars ready to deploy at cash and very low interest rates. One of them just borrowed $3 billion at 1.99% interest. They're going to.
Was that Invitation?
Yeah, that was Invitation. Yeah, they're in Cerebus Capital
Dallas
too.
Tanner.
Yeah.
Good for you, Dallas. That's my friend from high school, CEO.
Nice.
So Invitation Homes.
You got some friends,
awesome
buddy.
what they're doing.
Yeah, they're the largest.
Crazy, this Phoenix market.
Yeah. Go ahead.
So it's cool. It's cool to see what they've done. How it was once a small portfolio of like 5 million to 10 million, and
yeah, it's gigantic.
Grown significantly.
Yeah, the single family home, especially kind of after the 2000 build, is a highly desirable asset by institutions. I think it's going to fundamentally change single family homes forever, right? They're just going to continue to suck off supply. And that means if you own one, right, with less supply, values go up. But if you're a landlord, it also allows prices to go up and rents to go up. So it's getting to be fun to watch.
Is there worry or concern on the landlord end of some legislation, stopping that?
Well, yeah,
we've talked some about like this cancel rent people, and there's a lot of people that I'm kind of in that camp too, where they're frustrated because they can't buy because everything they want to buy, they get outbid by the corporate institutions and all the iBuyers.
Yeah, it would be, I mean, nothing will surprise me anymore, but there's actually stuff in Europe right now where they're trying to tax institutional buyers to death, right? It was first 1%. Now there's I think it's Germany. It might've been Switzerland, where they're going to tax them 10% of value to buy, right? If you own more than 10 homes, I think they call it, you're going to be called an institutional buyer and they're going to tax you. So yeah, there could be taxes coming. It would be, I don't know. I don't know how that would fly in the US, but nothing would surprise me anymore.
Yeah, I think a tax would be the way that they would try to do it.
Mm-hmm.
And I guess it would be just how they defined certain things, at what level it came in.
Yeah, because they're going to want to protect mom and pop. They were going to want to protect the people on the property ladder. Hey, you bought your first home, it became a rental. There's a lot of that they like, but I sense a growing frustration with people who have billions of dollars at 2% interest buying every home they can, right? There's an article I talked about over the weekend on Bloomberg where there are now homes that you and I would like to buy that we never see because Zillow and OfferPad and all these other people are feeding the hedge funds quickly. Zillow offers and all of that. So again, as you would expect, people with deep pockets that can cut checks in seconds, they're going to get inventory before you and I. Yeah. So it's the single family home. If you can go get one, because it's going to be a valuable asset going forward, I think.
Yeah, definitely. Everyone's after them, and I think that just proves that it's where you want to be.
Yeah. If I could snap my fingers and own one thing, it would be all single family homes. Yeah.
Yeah.
Yeah. My
Yeah.
portfolio is about 50-50, but yeah, if my druthers, I'd turn everything into single family homes today. It's where I see the next, 2 or 3 years, like Robert Schiller is saying, more value increase. But maybe in 2 or 3 years, it's time to 1031, just like last time I did in 08. I got out of, or 07, got out of houses and went to apartments. We'll see. It's never boring, but of course, Rilus, what do you have to do? You have to do the work. You have to do the work daily.
That's right. Yeah, do it. I'll start looking at inventory,
Awesome.
and I'm gonna be looking at the expired leads, if any go expired, and things like that.
Yeah.
So
Just
expired listings, and
it's got to become a habit. It's just, it's 10 or 15 minutes, get that criteria, set the alerts, the technology and apps today that I didn't have when I started. It makes it very easy for you, but you've got to be committed. You got to document it. And it really it's usually for most people like day 30 or day 40 where they go, oh my God, I can see it. It's like a current. It's like a leaf on a wind or whatever it is. So I know you can do it. It'll be fun to watch as we talk every week.
yeah, definitely. I'll keep you posted. So I definitely keep my eyes out. I'm watching neighborhoods. I'm
Yeah.
watching as they change. I can tell all the invitation homes.
Yeah.
They have a look when they get redone.
Yeah.
You can tell the ones that haven't been
Yeah.
that there's an old owner in there or something. That you're waiting for them to turn.
Yeah.
And it's crazy. There's always there's tons of dumpsters around.
Yeah.
There's just houses being redone, and
Yeah.
lots of movement.
Yeah. It's going to be fun. I think you're right. I think you said earlier in this conversation that it sounds like the wave of inventory is coming. The opportunity is coming, but you got to do the work now so you're ready for the opportunity.
Yes.
Very cool, Riley. So I appreciate this time. How can people follow you or get part of your world if they have questions?
Yeah, so my law firm is danalegalhelp.com. So you can follow me there, find the website there, or Instagram. I'm Rilus D. So I post stuff on there, and it connects to my law firm as well.
Very cool, Riley. Thank you very much, buddy. Have a great week.
All right,